What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Vivek Paul, Global Head of Portfolio Research at the BlackRock Investment Institute. This week, we discuss how investors can generate above benchmark returns amid heightened uncertainty. Even after the extension of the US tariff pause, uncertainty on who will bear the cost of tariffs means even greater dispersion in returns, and more opportunity to earn alpha, or above benchmark returns. We've long said that immutable economic laws will prevent US tariffs from rising back to April 2nd levels. The extension of the tariff pause until August supports that view. Wherever tariff levels land, some companies will be better able to pass on the cost than others, and we think this will boost already elevated dispersion. And unlike when the macro environment was more stable, persistent factor exposures, such as to growth or value or inflation, can now hurt portfolios. For investors, we think this requires watching for unintended static factor exposures and deploying active strategies to capture the additional alpha on offer. What's one way to do that? Reduce any drag from factor exposures by deliberately managing macro risk. Now that can mean pivoting quickly as the macro situation changes or leaning against market panic. In both cases, it means understanding the current macro environment and being decisive as to whether or not you stick or twist with current allocations. Another approach to capturing alpha, avoiding macro factor risk in favor of security-specific risk. Even within the Magnificent Seven of mostly big tech companies, we're starting to see increased dispersion as certain companies capture the greatest benefits from the build-out of AI infrastructure and AI adoption. That creates alpha opportunities for those with insight into potential winners. Here's our market take. We stick with our current overweight to US stocks. Market volatility hasn't shown up in US corporate earnings, and underlying economic conditions haven't changed much for now. As megaforces like AI drive a global economic transformation, quickly adapting short and long-term portfolios will be crucial as we get more information about that future world. Based upon what we know now, we like the financial and industrial sectors for both the Euro area and US, as well as US healthcare. For more details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com